We're going to move on very swiftly with our next panel on regulation. Keep using the app for providing feedback. I know this one is going to get some great feedback. Let me quickly introduce you to Sarah. Sarah Goddard is the Secretary General of Amici. Sarah, over to you. Thank you.
Thank you, Faye, and welcome back, everybody. We do have a lot to cover in what is going to be a short period of time for people like myself who spend their professional life working on advocacy for policy and for regulation. So I'll try to take my view out of this and leave this open to our panelists and to you, the audience. As Faye was saying, I think that we will get most out of this if you become part of this particular session. We commence this session with a keynote speech from Yoshi, who is the Secretary General of the IAIS, the International Association of Insurance Supervisors. We're very honored to have you join us, Yoshi. We're very grateful to have you here. If during Yoshi's speech you have any thoughts about questions you'd like to ask, he will be taking questions at the podium directly after the speech before we enter the panel discussion. You can send me questions through the app, or we can go back to that old style thing of raising the hands. It seemed that the champagne seemed to be quite a good way of doing it. Now, I live in Ireland, so all I can offer you is a pint of Guinness. But then from my Belgium operations, I suppose we can get a glass of I don't know, Stella or something like that. So there are options there, but it would be good to actually have you communicate directly with us. But if you are shy, please use the app. And Yoshi, if I could hand over to you.
Thank you very much, Sarah. So, biggest news is there is Belgian beer, right? So if there's a good question. So first of all, thank you very much, Sean, and everybody for this occasion. Every few years I come here as a speaker, and this is, I think, my third time to come here, and very much happy and delighted to be a speaker here. Our association, International Association of Insurance Supervisors, is an international rule maker of insurance. All regulators, of your regulators around the world is our member, IAIS member. And what IAIS does is to create international insurance rules of the game. I'm a CEO or Secretary General for 15 years of this association from startup. And what I'm going to do now is to provide an overview of international insurance rules. And naturally, very much distinguished panelists, so stimulate the panelist discussion. Before kicking off, just my very much personal summary of last one day, and very much linked to your work, cooperative and mutuals. As we learned this morning, it's a huge gap between economic loss and insurance covered loss. It's only 2% or less than 2% coverage in emerging market. And what is important to know is this gap. Economic loss and insurance coverage is bigger and bigger every year. Climate change, natural disaster will exponentially increase. Huge uncertainty, cyber risk. Economic loss is inevitably bigger, but insurance coverage is very slow to develop. We have learned also digital economy and financial technology innovation. One positive message of this innovation is you have a tool to have constant dialogue with your clients or your member. Not only at the moment of contract, but also during the whole contract period and claim payment and so on. And this morning, we discussed very much mutual's cooperative principle. Your principle is trust. Trust among members, trust among your policy holders. It's a huge asset, and it's a base of insurance. As all of us know that insurance is a system that people collect money, friends collect money, and unfortunate few will receive this, after having economic loss. Mutual cooperative is definitely based on this insurance principle. In other words, you have a huge strength of connection with your policyholders, members, and trust. Very trustworthy relationship. Combination of huge access to the constant access to your policyholders or members and your trust-based business model, we have a huge potential. Huge potential that you can grab and you can take advantage of. And this is not only opportunity, but I think this is your responsibility to just feed up the gap. Gap is bigger and bigger, but you have a responsibility to feed up the gap. So in other words, it's a huge opportunity. And one issue that I would like to stress in the morning session, Marek mentioned that it's important that many of your business is local. But because of local, you need global cooperation, where economic takes an important role. If you stay in a local community, but if you have a common interest, you have to share the idea and talk with the regulators together. Otherwise, for example, I have a constant dialogue with big companies, CEO, and so on, but I don't have much opportunity to talk with you. So collectively, you have to signal how important you are and how potentially huge opportunities you are. So I hope that this dialogue today is not one-time event, but a regular event. So what I'm going to do today is just very much overview what we do in the past. First, very briefly explain, last month we issued so-called application paper of insurance, particularly targeting on mutuals and cooperative. So very much essence of this paper, and key message in this paper is proportionality. So I just briefly touch on proportionality principle, and then very much quick overview our principles applied to all insurance companies around the world, insurance core principles, ComFrame, New Capital Development Initiative, and very briefly our initiative to particularly implementation standards for emerging market support, microinsurance issues, and financial technology. So first, our paper, supervision of mutuals, cooperative, and community-based organization. This is the very important paper or standards or application paper for IEIS and directly relate to your activities. Very important principle that I stress is IEIS standards. All IEIS standards should be applied to you, mutuals and cooperative. There is no doubt, but in a proportionate manner. International standards is applying to you, but in a proportionate manner. Proportionate is extremely important concept, and we need to elaborate further in the coming years. And proportionate manner, first of all, meaning that nature of your business, scale and complexity of your business should take into account in the insurance regulation. In order to do that, first of all, regulators, supervisors should understand your business model, specific character, particularly compared with stockholding companies. You have no shareholder. We have no shareholder equity. And you have governance, very specific character of governance, members on the company, and board, often the case, is very much composed of members. That's a very different character for stockholding companies. So you are different, but you are insurance business. So our principles should be applied to you. That's no doubt, but we should take into account your nature of your business. So what we did in this application paper is just take into account your business-specific character and create so-called proportionate regulatory principles or application. such as, for example, licensing, capital requirement, governance issue, portfolio transfer, and so on. One important message that we stress in this paper is access to insurance, which I will touch upon a bit later. Proportionality principles is extremely important principle, not only for specific business like mutuals or cooperative, but all principles of the association. Nature scale complexity should be considered of insurance regulation of specific business, but also all the business model around the world. Developed markets business, emerging market business, and we have intensive discussion because once we discuss proportionate, what does it mean? What does it mean to me? Corporate mutuals totally ask legitimately that question. Big companies, internationally active companies ask this question. And you might know IAS created international rules of the game of systemic important companies. 9 companies we designated, and those companies' rules. Of course, those companies are very much interested what proportionate mean to us. So this is a very simple chart, what we do, our rulemaking. When I joined the association, after a few years, we create international rules of the game. One rule, or one set of principles, we call it insurance core principles. We have no distinction, no proportionality principles, one single set of principles, insurance core principles. This is the third layer of this circle. And then what we did is 2009, the middle second layer, a little bit light blue circle, we specifically proportionate approach to internationally active insurance companies. Naturally, they have specific character. They have to deal with not only single regulators, but multiple regulators. And they operate not only single countries, but multiple countries. So we need a special regulatory measures is needed. So we create this so-called common frame for supervision of internationally active groups. Third, in the center, global systemically important companies, we create standards, assessment methodology, policy measures 2013. Few years after financial crisis. Bottom line is after AIG crisis and other insurance-related crisis, we definitely think that we need some specific measures for systemically important companies, and we designated or identified 9 companies and create specific policy measures. So this is very limited number of companies, but specific proportionate approach to them. At the same time, the biggest part of the circle, microinsurance, is very important part of proportionate approach. And to some extent, mutuals and our corporate paper that we issued last month is the same. We take into account specific business character of microinsurance, and from 2012, we develop specific application papers and guidance for those business models. In short, we take very much proportionate approach, taking into account business scale, nature, and complexity, and create international standards here. Here I want to touch very much more timing and process issue. So now we have IAS have international standards of whole set, but some improvement is needed. First of all, insurance core principles is a foundation for all principles, and we are now improving, enhancing core principles in combination of COM frame for internationally active insurance insurance groups. So those we are going to complete 2019 in 2 years. You might have heard ICS. ICS is abbreviation of Insurance Capital Standards. It's equivalent or comparable to banking Basel 2 or 3. So what we are going to do is to create international insurance capital standards in 2-year time. This is a part of COMFRAME, so it's the same time schedule and naturally closely interlinked with other policy measures, governance, risk management, which is covered by COMFRAME. ICS, we are going to develop 2019 implementable insurance capital standards, and naturally it will impact on many of your business too. So let's turn to our another key activities of association. As we discussed last one day, and it's in our heart that I see, shown that the statistics of ICMIF. ICMIF covers nearly 1 billion policyholders, or you call it members. Huge amount of policyholders get benefit from your insurance or cooperative mutuals coverage. But at the same time, 5 billion, 5 times more people have no social protection in this world. There is a huge gap. And in order to address this gap, not only you as an insurers or mutuals cooperative, but also regulators, supervisors should play a role. Sound regulatory approach is foundation of sound market development. So it's our heart, supervisors' heart, how we can contribute this growth or economic growth. Sound insurance regulatory approach helps economic growth around the world. And what we do in the association is first, we assess our countries or our members' insurance system. And if there is a gap, we help, among our members, help those countries' gap. And to establish sound foundation. And help means that we provide some tools, best exercise, and so on in terms of financial inclusion issue. And time to time, we have a capacity building, helping each other, and in collaboration with other aid agency, and so on. So this is heart of our mind. Of course, capital, sound regulatory approach is critical, but without huge number of uncovered or undercovered or potential insurers or insurance policyholders, it will be a no role that our insurance system is even sound and healthy. So this coverage increase based on sound insurance system is extremely important, and we do take a lot of action, and we'd like to continue this effort too. And microinsurance, we hope that we have time to debate in this panel today, is extremely important, and we have a special partnership access to insurance initiative and work very hard to support countries' development of financial inclusion of microinsurance. Last part is financial technology. One character of this financial technology, as we have discussed yesterday and today, is not steady growth, but exponential growth. And it's definitely, all of us know in this room, that you will change, your business model will totally challenge, and you have to accommodate this new technology change in the future. Naturally, it's not only your issue, but our regulators' issue too. But somebody in the morning mentioned that the insurance regulator is lagging behind. Inga mentioned. In a sense, it's true. But what we want to do is at least catch up what you do, and timely policy making is extremely important. Without such, again, sound insurance market will not be ensured or developed. So what we do now is to our insurance regulators community constantly create a discussion network and exchange information. Time to time invite startup and conventional companies who take into account a new business model and discuss together. In other words, monitor what's going on. And through this exercise, we identify a few issues. As many of you might know, that sandbox approach. Sandbox approach is to create a regulatory environment where startup can operate as a test basis and in other words, to facilitate new startup to operate in the market. But of course, there is less intensive, basically less intensive supervision or regulation to those companies, but clearly signal or mention that policyholders that these are not properly or sort of same level regulated with the other traditional companies. So this sandbox approach is very common or more and more a la mode, but we try to identify what's the best practice. Is it a good approach? And one sandbox is moving up to the normal sort of regulatory environment. What's the criteria to move up? Those issues we need to, regulators have to talk and coordinate closely. One case study that maybe some of you might know, that in China, which is very much advanced technology developed market, only 1 year starting up one company have 600 million policyholders. 600 million. I live in Switzerland, 8 million population, nearly 60 times population covered one single year, one single new startup. This is one symbol of how it could be a potentially big impact on your business or market. And there are plenty of other examples that something new, very dynamically and exponentially happening. So policyholder protection, of course, if it goes well, that's fine. But if there is a failure, policyholder protection is a huge issue. Cyber, without mentioning it. So those issues we watch carefully. And what we have in mind is this is very new rules of the game. First, what we need, and business is the same, we have to work closely, not only among insurance regulators around the world, but naturally other financial sectors and other industries like telecom or even other social network regulators and so on. So it's very much new rules or new sort of, a platform that we should cope with and we should create and cope with. So I just want to stress what we are doing in the regulatory front is cooperation, coordination, and also timely action, not lagging behind, but timely policy measures action is extremely important. So Sarah, I stop here, and I know that the most precious time is our interaction or panel discussion, and I'm really looking forward to panel discussion. Thank you very much.
Thank you, Yoshi. Now, before we do start the panel discussion, would anybody like to raise any questions specifically based on the comments that we've just heard from Yoshi? Do I have any takers for a pint of Guinness? No, I agree with you. Despite the fact I live in Ireland, I hate the stuff, to be perfectly honest. There was one question that came from the floor that perhaps I can put to you directly before we go into the panel. And this was in the context of microinsurance, but not specifically to it. The question reads, there has been considerable discussion, particularly in the context of microinsurance, of the use of parametric products. As they don't require insurable interest or proof of loss, these products are not insurance. They are at best derivatives and at worst gambling agreements. In some jurisdictions, including the UK, they cannot be issued by insurers who are constrained only to issue insurance products. How are or how should regulators act to enable the utilization of these highly effective products? Now, any comments that are within that or value statements are from whoever wrote this to me anonymously. These are not my comments. But Yoshi, what's your view on this?
First of all, I do not think this is a gamble. I think this is a very good, social protection tool. And there is a legitimate reason to develop that issue. And thanks to data collection, huge amount of credible data is around the world now. So, of course, the heart of this question is it insurance or not insurance? And we are debating this issue, and we are going to issue, my colleagues here, is soon this our conclusion, at least our idea. But bottom line is it's excellent tool. First of all, it's simple to formulate. Second, we have sufficient data, more and more available. And third, payout is so straightforward. So there's a much attention should be taken to this initiative very much, and the coverage of particularly low-income people, agriculture business is a huge potential. So in spite of, I really hope that the regulation will not, prevention or to slow down this innovation, but more collaborative and enhance this kind of tools or potentially insurance tools in the market.
I think what I'll do is I think this is a subject that we should come back to as a panel. But before we do that, we have here to my left probably the most diverse panel I've ever been involved in for far too many years that I've been involved in the insurance industry, which is fascinating for me. I come from an insurance journalism background. This would be my delight to be in the audience. It's not necessarily as much of a delight as being the moderator, because there are lots of different perspectives here that we want to bring together. But in order for you to understand the comments and the perspectives that will be brought by each of the panelists, I would like each of you now to introduce yourselves in turn to our audience so they can understand a bit better about you, who you are, what you're interested in, and what your direction is. So perhaps, Alejandro, if I could start with you, please.
Hello, everyone. I'm going to speak in my natural language, so I invite you put on the headphones and enjoy the excellent work of our translators. Well, muchas gracias, Igmith, por permitirme participar.
Thank you very much. Thank you very much for inviting me one more time to this event. I'm General Manager of the La Segunda Insurance Group. It's a cooperative. It was set up 83 years ago in Argentina, and we offer all sorts of insurance products. It's one of the 10 major insurance companies in my country. Turnover is $1 billion. We have all sorts of services, 2 million members. We deal largely with the agriculture and livestock sector, and we offer coverage for risk-based coverage to them. We work in Argentina. We also offer coverage in Paraguay and Uruguay. We have a cooperation model that we've explained to you in the past. We work together with a company in Surco in Uruguay. We have 1,400 members of staff. Our country is as wide as it is long. I am an accountant. I have a degree in business administration. I have more than 30 years' experience of working in this sector. As all Argentinians, I love football. My favorite sport, however, is basketball, and I do play basketball. Our corporate brand is somebody who is well known in the NBA. He started his 16th season in the NBA just 2 days ago. I hope that's enough about me. It's pretty detailed, but if you want to know more, just come and ask.
If I could turn next to our next panelist, and just if you'd like to introduce yourself and a bit of background for our audience here.
Sure, Sarah. Thank you very much for the opportunity. I won't continue on my own language because I will lose you all. There's no translation for Dutch today, so bear with me. I'll try in English. So my name is Joost Heideman. I'm CEO of Unive. Unive is the second largest mutual insurance company in the Netherlands, founded in 1794 by a few farmers, like maybe many of our companies in the past. We carry mostly general insurance, fire insurance, motor insurance, and we do that, have done that for a long time with a great brand name and reputation. And we hope to continue to do this for much time longer. Although for that purpose, we do need to change, I think, and we do need to get our act together, work with new technologies and what have you, and surely make that mutuals are here to stay, but I think it requires work from all of us. In my capacity as CEO, I actually have I'm on the receiving end of regulation, so the nation side on the left side, I'm on the receiving end. And that's not always easy. Regulation can be pretty tough, can be a burden, can be pretty strong, and we need to accommodate that. And we're trying to the best of our ability. And we'll get into that, I think, a bit more later on. Maybe equally important within Amice, the European platform. I'm also on that board, and I think collectively we're trying to, in good cooperation with the supervisors, trying to make proportionality work. You touched on that, Yoshi, before. I think proportionality is extremely important for our industry to not only talk about, but actually put into practice. So I'm on a mission at Unive, Amice, and at the other table to make proportionality work in real life, because I think we're not quite there yet. So in terms of football, I won't go there. Holland didn't qualify for the World Championship, so that's a bit of a tough topic. And maybe I'll leave it at that, Sarah, and continue on in the panel.
And as a Crystal Palace fan, it's even worse for me, so don't worry about it. Anna, if I can hand over to you.
Thank you, Sarah. I definitely will not get into football. So I am Anna Gonzalez from the University of Cambridge Institute for Sustainability. And I work on areas of policy related to insurance regulation and sustainable development. It is very special for me to be here today, and thank you very much, ICMIF, for this invitation, because ICMIF has actually had a substantial influence on this current line of work that I have taken. My background is in the political economy of international trade law and human rights. 4 years ago, when the Sustainable Development Goals were being negotiating, I was working on aspects of financial regulation to support access to the human rights of life, livelihood, and shelter. Very timely, I met Sean Tarbuck and had the pleasure of being invited to one of their ICMIF meetings in Brussels, which was a complete turning point. There was different work of many of you here in the room being presented, and particularly presentation by Kumar from Uplift Mutuals in India and by Ari Salib from Card MBA in the Philippines. Was striking. It was the clear message was the insurance regulation is completely crucial to provide access to insurance, not just the payouts, but the risk reduction benefits that people get by belonging to an insurance program. And it was that realization, when we are talking about people living in the poverty line, that means literally the difference between life and death, the difference between being able to get medical cover or dying, or the difference between having a livelihood or not having anything and perishing in hunger. So that was transforming. It was that concept of protecting capital to protect people where the penny dropped for me. And insurance regulation became that key to unlock those human rights that I had been on livelihood and shelter that I had been working for so many years. Since then, we published a report on insurance regulation and sustainable development in Cambridge that was picked up by the intergovernmental conversations around the Sustainable Development Goals on raising the profile of insurance. And also, I also have the pleasure now to announce that the University of Cambridge Institute for Sustainability and ICMIF have started to collaborate on a new project about mutual microinsurance regulation specifically, but proving the impact of mutual microinsurance to support regulation, which we'll hopefully come back to later on in the panel.
That would be excellent, thank you. And if I could pass across, Tim, to you.
Good afternoon, yes. I'm Tim Yates. I'm Managing Director of AXCO. Some of you will have heard of us, maybe others not. I've tried to get around to see some of you today. What we do is we visit, on behalf of the whole global insurance industry, non-life, life and healthcare areas, pretty much most countries around the world. And we talk to regulators as our primary point of contact, to associations, and to all those we consider key market players in that country or jurisdiction. And we ask very pointed, consistent questions to try and understand not just what's going on in that, what the laws are, the regulations are, but how they're being interpreted, how well they're being implemented, and so on and so forth. And we do that on behalf of, as I say, the whole insurance industry, but obviously we're not trying to teach the people within that country what's going on in their market. We're trying to tell people outside that country what good or bad lessons can be learnt from that. So we consider, and I think there's a certain commonality of purpose, at least by the people on this panel, if not diversity. And I think we fundamentally believe information is going to be central in some of the revolutionary changes we've been talking about earlier. And we think AXCO should be talking a lot about information, and we shouldn't just be talking about the technology side of information technology. So that's what we do.
Thank you, Tim. And Bill, if you would give us a few words, please.
Good afternoon. I'm Bill Marcoux. I'm a partner with the international law firm of DLA Piper. For the last 35 years, I've worked with and tried to assist the vulnerable, the frightened, the confused. That is, we advise insurers and reinsurers on how to deal with the ever-growing, increasingly complex and burdensome insurance regulations. That work has revealed where regulation, in all honesty, is very, very important. It is critical to how this industry acts and interacts with its insureds and other stakeholders. And it is, Yoshi, as you noted, it's good insurance regulation is absolutely critical in establishing the trust among all the stakeholders and this great industry. But there are areas in which maybe you could say too much of a good thing is maybe not good, and there's areas where we think that is, that has happened. To bring this to the topic for today, as we talk about, and Will, you've heard some discussions of the International the Insurance Development Forum, and the role of insurance in trying to close the protection gap. One of the working groups of the IDF is on law and regulation and policy, trying to get that right. It's been my real privilege to chair that. Tim is on that working group, as well as a number of other people. The OECD has been hugely supportive of that, and others have as well. And we can talk more down the road, but I also come to this having spent the last year and a half or so trying to look at the regulatory legal architecture that will either enable or curtail the ability of the insurance industry to close or help close the protection gap.
Thank you. So now you know what we are about. And rather than take Faye's great way of getting the energy in the room this morning, of making you jump up and down, I am aware that we've all had something to eat now, so that might not be a good way forward. But I would like you to turn to your apps and to answer our first question. So you will see from the app that the question that we've put as number one here today is, to what extent does regulation in your market provide effective protection for the consumer? Now, we have such a diversity of marketplaces represented in this room. So it will be fascinating to see where we come to, bearing in mind that we have got this global spread. So your answers are: A, it works very well. We have a few problems in our market. B, it works well, but the cost of compliance exceeds the benefit to customers, to consumers. Or C, our market is over-regulated. Customers lose some of the benefits of insurance and or pay much more than they should due to regulation. So if you'd like to get voting and answering now, please, that would be excellent. Look forward to seeing what your views are on this. These are some of the areas that we may be exploring a little more as we progress through this panel, but we are limited in time. So I think what we should do, whilst we're waiting for those results to go through, here we go, they come out. Ah, ha, ha. Oh, Yoshi.
I'm so used to it.
I am so glad that you made that offer for continuous dialogue that we should carry on, because I may be in your office in the next week or two after this. Yeah. So the global perspective is that not far short of half of the 115 responses we've had, and I haven't responded, so it's not my fault, says that our market is over-regulated. Customers lose benefits of insurance and pay more because of the regulatory agenda. Now that's fascinating because the regulatory agenda is diverse. Despite the fact we have global standards, we see very different environments in very different countries. Maybe Alejandro, if I could turn to you now, just to give us some insight into how the regulatory agenda is developing in your country, and then a bit more around the Latin American experience.
Sí, cómo no, con mucho gusto.
Of course, with great pleasure. In Latin America, the situation is different, of course, from country to country, and some are more advanced in regulatory issues than others. You could say that there are three blocks of countries. For instance, Mexico, Chile, and Brazil are the three countries that have taken the initiative. They are implementing with different degrees of success. And we follow the Chilean model because they have been implementing solvency rules for the past 20 to 25 years. Then you have those countries in the center, let's say, those that are looking into the possibilities. Here, they're setting up regulatory frameworks. I'm referring to Colombia, Costa Rica, and Peru. Here, those countries in the middle, and then you have the remainder of the countries. We are in the framework of what you could call Solvency I. We have just begun to analyze the situation, or the regulators have just begun to examine what to do, really, and where to go here, what direction to head in. We've taken some things from the European experience. We've taken other things from, for instance, Chile, the Chilean experiences, etc. But there has been overregulation in quite a lot of cases. And that runs counter to the philosophy behind the insurance business. If we want something which is ever more inclusive, if we want to reach more people with more coverage and better quality products, then it makes no sense then a regulatory standard stops us from doing that and makes the product and the coverage more costly. The client usually is absent at this type of event. They are not represented here. And clients often, at least in our part of the world, very often cannot distinguish between an insurance company in Solvency II and in the framework of Solvency I. What they're looking at is the benefit that the insurance product might bring them and the coverage and what would happen if he were to have a problem and needed to use the product offered by the insurance company. So all this regulatory framework really is something that the client is not really aware of. We must be aware of over-regulation. Insoltex is another issue. New business models are being fine-tuned. They're very similar to insurance products, but they're not insurance products. The only barrier that separates them is regulation. Insoltex, then. That is a growing industry because it's based on client demand, and insurance is lagging a bit behind, and it's propelled by the regulator. So what are we going to do, really, given this type of situation? Clients want us to solve their problems, and we have to see what the best way of doing that is on the basis of capital requirements. To need more capital requirements. I mean, we don't have the reach that Europe can have in Latin America. Who is going to supervise also all this regulation? Who's going to make sure that it's harmonized when it comes to be implemented so that it is applied harmoniously in the same matter, in a uniform matter throughout? So who's going to supervise all this? And governance issues, too, are important. And we need also to solve problems which are regional in nature, which fall under different jurisdiction, but in a uniform fashion as far as is possible. So these are the difficulties that we face, and we are following what is happening in the regulatory field. What we're trying to do is simplify matters as far as possible, to do the same but in a simpler and easier way and in a less costly fashion. Two, we follow very closely developments in the framework of Solvency II in Europe, of course. Another thing in Latin America is, and a strong point, is a cooperative insurance movement, really. I read a report from Amici which says, I think it was that 50% of the world has no regulation in the field of mutual and cooperative insurance business. Latin America is affected by this too. Look at Brazil, Chile, Peru, Uruguay, in fact, also Paraguay too. Cooperatives can be the owners of insurance companies, but they cannot be the owners of the insurance as such. It's something that we have to work together with regulators on. ICMIF is doing excellent work here, Catherine Hook, etc. We've participated in the ASAL fora and meetings where Latin American regulators discuss the future of the business, and we are trying to inform them about the way in which cooperatives work. We need to work on the basis of solidarity. So what's better than a cooperative or a mutual insurance business in order to promote this idea of solidarity in the insurance work? So we're working on this, and we're working on informing people. Regulators establish many barriers, entry barriers, really. They raise problems of governance, of equity, of procedure, and they also they raise this sort of barrier, this sort of problem, and make it into an obstacle, an entry obstacle quite often. The third or fourth market in Latin America is the Argentine market. We have about $15 billion turnover. Mutuals and cooperatives have a 32% market share. So we have greater market shares than in other parts of the world. 180 companies in our country, but the 10 major groups responsible for about 60% of production include 4 mutuals and cooperatives. 3 of these are represented here in this room, together with ourselves, La Segunda. So the Argentine model is very heavily represented, as are mutuals and cooperatives, and we don't really understand. It's very, very difficult for us to understand why our neighbors don't accept mutuals and cooperatives, don't let them in when it comes to developing their business models in the field of insurance. So we have to correct what is wrong. We also have to highlight what goes well. We are much closer to our clients. We're much more transparent. We have to highlight the good points of cooperatives and mutuals, so we can offer products at a fair price, especially when we discuss with a client face-to-face. In Argentina, we can exert some influence here because we're about to take over the presidency of B20, which is where this sort of thing is decided on. I think that there's another Argentine representative who wants to be a candidate to the presidency of this alliance. And I think that that will help. We can bring our influence to bear and tell regulators that we are the best tool for an inclusive type of insurance. So these are the problems, the weak points and the strong points that I see in Latin America. The weak points are that there are different, that things are developing at a different rate depending on the country. And also the fact that cooperatives and mutuals are lagging behind. And we need to point out the positive advantages that they bring to bear.
I think one of the interesting things that you've brought up, and it's not just Latin America that this is isolated to, it is a European issue as well, which is if we talk about proportionality, and as Yoshi said, there's nature, there's scale, and there's complexity. But if the nature as a mutual is not recognized in the local environment, then how can you have that access to proportionality about your nature if it's not a legal form in the country in which you are operating as an insurance entity? So that's something that we experience in Europe. I know, as you said, Catherine's doing work at the global level as well, and it is something that's a fundamental core of the policy work that's being undertaken by the secretariats. But, sorry, Yoshi, would you like to come in on that?
Yeah, just to immediately reply to Alejandro's comment. First of all, I really appreciate Argentina's reform. You know, that's a huge change of new government, and they come to our meeting regularly, and your initiative of new government is extraordinarily positive. So that I really appreciate. And also, you enlighten us how important cooperative mutuals issues in not only your countries, but around the world. So as you said, Sarah, this proportionality is an important concept, but as we discussed, Joost, that's quite difficult to grasp. What does it mean in the real practice, in the regulation? So there is a huge room for enhancement, make it concrete, what does it mean? And your initiative, or Latin America, but Argentina's size of the market, impact, positive impact on the market is a very good example that we can learn together. And you mentioned Latin America regional coordination is extremely important. And Sarah, you mentioned Europe, but globally, even important somebody to coordinate not only Latin America, Europe, but around the world, which we would like to take care of, and we'd like to work with you. So that coordination among regulators is extremely important foundation, not because adding on the regulation, that's a little bit, I want to say something on this percentage. Nobody appreciates, you know, how do you say, good regulation, often the case not appreciate regulation, but regulation is meaningful only because proportionate and policyholder protection is ensured. And it's a fine line. People say that it's over-regulated, but people also complain that if something happens, regulators do not take right action or take preventive actions. So imbalance is important. Very important principle here is risk-based approach and proportionate. And as you mentioned, Alejandro, very much risk-sensitive approach, Solvency II type of approach, is important to sophisticated companies, but the very simple companies, maybe Solvency I type of approach is sufficient. So this proportionate but risk-sensitive in the proportion to the company's nature, scale, and complexity is very important principle.
Bill, would you like to come in on this one?
Very briefly, I think I'd pick up on, if you looked at the survey, it was what, 47% felt that it was over-regulated. 35%, an additional 35% said well-regulated market, but the costs exceed the benefits. And if proportionality is really code for cost-benefit analysis, and I think that's a useful use of that phrase, which is, what are we doing? What's the cost? What's the benefit? Let's get that balance right. Yeah. I think that's a good definition of proportionality. If that's it, you take 47, 35, somebody do the math. Was that 82% of the people think that the regulation isn't quite striking the balance and doing the right job? Now, it's an audience that's maybe, slightly biased and looking through one side, Yoshi. But that's a strong consensus.
It is, and actually there was one of the comments that came through the app. Keep on sending them in. I'm loving reading these at the same time as talking to the panel here. But it says, regulators seem to be ignoring IAIS guidance to consider proportionality and instead apply a one-size-fits-all standards, particularly to recent IAIS standards like corporate governance annual disclosure and holding company regulation. So I think that's probably more a reflection. But it's not all bad news. Maybe, Hust, if I could come across to you, because there are some areas in which proportionality is being explored and maybe beginning to get into the realms of a potential reality.
Yeah, but that's very nicely put, Sarah. Still, let me make the following point. So in Europe, much unlike Latin America, we're strongly regulated. We have IOPA. There's very stringent Solvency II regime. In the Netherlands, we face a local supervisor regulator who wants to sort of be best in class as well within Europe. So we have it even stronger. That's all good, but what's not all good is that in applying these new Solvency II rules and regulations, proportionality is in spirit regulated, but in practice not really there. Let me give you an example. In the Netherlands, there's two Solvency II regimes. One is Solvency Basic, which is for up to 5 million worth of premiums, but everything beyond that, from 5 million to 5 billion, is basically has to comply with the same rules. And we just feel that that's a very small step, and then a huge step for everyone. And then there's a danger, because the 80% that was highlighted here, what I see in the Netherlands is that I'm also chairing the platform of Dutch mutual insurance companies. And we may be number 2 in the market, but there's many after us. Actually, their business may be at stake in future if regulation doesn't get better fit for the purpose. So I think in addition to feeling bad about it, there's really a danger in the future that, especially in the mutual side of the business, the over-regulation might actually harm their existence in the long term. This is a serious threat in the Netherlands. So that's why, as a chair of the platform mutual insurance company, I'm really taking it to my heart to get that on the table and get in dialogue. And that's where in the Netherlands, maybe you were alluding to, Sarah, is we are in constant dialogue with the local supervisor, and they receive us well, and we get coffee and we talk nicely. But then at the end of the day, again, I'm a businessman, I want to see results. Something needs to happen, something needs to change, if you will. So more recently, and I think I would highlight that too, there was a question this morning, I think somewhere over there, about the political establishment, because our issue is how do we get the regulator incentivized by changing some of these rules. And we've actually taken the corner of making our case in public debate also to the political establishment, and they have now actually helped us and assisted us in making the Minister of Finance and the regulators also deal with the pressure coming from that corner. And now they're more willing than before to talk to us and actually talk about specific measures that we can in place to ease things up a little bit. So I think we're making some steps. We're certainly not quite there yet, but the encouragement to all of you dealing with it in your own areas is be smart about how you bring this across. And I want to make the point that there's also a thing with the accountants, because we have as many discussion with the accountants as we do with the regulators, because they sort of go hand in hand, and the regulator may be on your side, but the accountant may have a different view, and the accountant and the regulator don't talk to each other. So it's a complex setting. I'm sure it's not impossible, and we keep striving for the right thing, but it's very, very important that today and after today, we keep sitting on the same table to have dialogue, because I think that's really where the solution is to fix some of these issues. It needs to be fixed, otherwise I think parts of our business, especially mutually sides, might actually be in danger rather than just having to deal with burdensome regulation.
Yoshi, would you like
just
to
very
respond?
briefly. One very excellent news is our application paper, Mutuals Cooperative, that issued last month. It's a close collaboration with ICMIF, and ICMIF very much involved in this paper development. But I would like to stress this dialogue is extremely important, and we have constant dialogue with our so-called stakeholder, where majority is represented by stockholding companies. So this type of dialogue, this time but continuous dialogue, your thought of, for example, definition of capital is critical for your business. And once international standard is set, it's not so easy to change it. But your definition of capital is unique. So how do we work together? You can explain to us your uniqueness, not only capital issue, governance is very unique too.
Absolutely.
We just kick off this, first application paper, but we constantly improve, enhance our international regulatory standards. So dialogue between you through our ICMI for Amici or other regional group, or directly with us, companies or mutuals cooperative is extremely valuable for us, so that proportionality is well taken into account.
Absolutely, and thank you. We will accept that generous offer, genuinely. Thank you. Tim, if I could
I just
get your
wanted to-
worldview.
Yeah, I mean, there's a clear opposition, in theory, between laws and regulations that have to be, say, passed through Parliament, through a long process, written effectively down at a point in time, and the fast pace of change in the real markets. And I just wanted to stress that the dynamic nature of the markets and the non-dynamic nature of regulations, by definition, can create tension. So I think when you go around the world, there are a number of issues that could be addressed. And it's clearly improved dialogue or communication, and not just, by the way, I think, between the regulated entities, who are diverse enough, mutuals, insurance companies, reinsurance companies, they all have their own axe to grind, and the regulator, but clearly from the insureds, who are equally diverse. So if you're a highly sophisticated international or multinational company trying to perform a risky operation in a given country and coming up against an emerging market set of regulations where the talent to understand the risks at hand and the capital deployment and different triggers or other complexities you may need to use, you're going to get this opposition, potential opposition, I think, every time. And so there doesn't seem to be really any sort of perennial solution other than constant communication. And I think that's almost with information and education. That seems to be the only way to resolve this.
Yeah, I think we've heard about regimes where there has been a long history of the development of the regulatory infrastructure. And we've also seen that sometimes of that long history can result in complexity. With Europe, it's not just Solvency II, we have all sorts of different regimes which are creating a burgeoning employment scene for people involved in governance, quite frankly. But Bill, you're in a different area as well with your IDF work, where you're looking at building new infrastructures. And what are the best environments? Could you elaborate a bit on how that works and how it comes into what we're seeing as the global environment?
I'd be happy to. And again, the IDF's certainly initial and primary focus is on closing the protection gap around natural catastrophes. And indeed, I think even further than that, particularly in emerging and developing economies, although there should be no doubt that the protection gap is massive in my country, the United States, throughout Europe, as we've seen with the Italian earthquakes, as we've just seen with the hurricanes and the floods and the fires in the United States as elsewhere. So this problem that's being addressed is certainly a mature market and a developing market and everywhere else in between. But what our group has been doing is the IDF in a broad approach of working groups that are trying to tackle various aspects of this problem, including risk modeling and mapping and others. But our group has been focused on what is the best, or at least an acceptable, environment of laws and regulations and indeed policies that will promote closing the protection gap. The one thing that we've learned from it is a wide array of these laws and regulations and policies. Insurance regulation is part of it, but is only part of it. But within the insurance regulatory area, of course, it includes what are the solvency margins, what are the licensing requirements, market access, particularly in the area of reinsurance, because these large losses, just the companies that have the appetite to cover these massive exposures and have the technical ability as well as the financial strength to do so are largely, maybe not exclusively, the global reinsurers. there are many markets where they cannot operate on a cross-border basis. And that's just one example of where regulation could impede what the goal is. But beyond insurance regulation, there's also, this is a core part of it, and this is particularly with regard to emerging markets, basic rule of law is necessary. You have to have the laws that allow you to form a contract, enforce a contract, dispute resolution, and the like. You have to have the right securities laws to access the capital markets, particularly insurance-linked securities, this topic that came up just a bit ago, whether it's insurance or not. I'm very happy to talk about that in a bit. But the ILS market has been a huge component of providing capacity to cover these risks. But you need to have, in a jurisdiction that wants that capacity, the right laws to allow those to be issued. Tax policy, major issue here. Then when you look at policies, more governmental policies, basic ones, government procurement policies. If a government, and particularly because the IDF is focused largely on sovereign and sub-sovereign risks, it does have a microinsurance initiative and others, but particularly in the area of sovereign and sub-sovereign risks, if a country agrees or understands, wow, I've got a huge exposure to this, I'm going to buy a cat bond or I'm going to buy a catastrophe reinsurance protection, do they have the authority to do that? Can they spend government money on such a thing? They can probably buy a military jet and other things. Can they actually buy the protection? Or on the back end side, what if there's an event and tens of millions, if not hundreds of millions of dollars come in from the insurance payment? Where does it go? What part of the government? What do they spend it on? Who audits it? Who tracks it? There's a lot of money. And at least in a few countries of the world, you might be worried about a large amount of cash flowing in to government coffers. So the environment that has to be set is, and those are only parts of the areas that we've looked at. We've actually, through our working group, have compiled what's essentially an outline of the array of laws and regulations. And it's 23 pages long of just headings of the laws and regulations that are relevant. So in no country, as we've looked at this, to pick up on the last point here, there's not one recipe for success here, and it's not a one-size-fits-all. Clearly, jurisdictions have different issues, or different paces, or on the path of evolution, and so it needs to be calibrated. But it is something that's vitally, vitally important. And I will say we have said over and over again that it's important, particularly on the insurance regulatory side, but I think even with regard to these other broader government policies, to have the insurance supervisors engaged in that dialogue. It's no good to have the finance ministry maybe say, yes, this is what we're going to do, or the insurance industry saying this is what we should do, and the insurance regulators, who are so key to making a market work, aren't there. Joshi knows we probably haven't had the level of engagement with the regulators that we'd like. That's probably our failing. But I think it's important that dialogue happen because these issues are moving forward. But it's a complex area, and the net of it is what we all know. The right laws and regulations allow this industry to thrive. The wrong ones completely stop it or curtail it or make it more expensive. Now, what's right is a very, very difficult issue.
Great, thank you. Anna, from the work that you've done on sustainability and on the microinsurance aspect, where do you see the regulatory and policy gap and the needs that come out of that? And then I've got a question specifically for you that's come from the floor. But if we can go through that first, please.
Yes, so I would like to link up with the panel we had before ours and to just remind ourselves of this growing momentum that there is around insurance and international policy that has not been here before. So all governments of the world have agreed to the Sustainable Development Goals. And as Jan was telling us earlier, this is about development countries and developing countries. It's about everybody making commitments nationally and internationally. Now, the very special thing that has happened in the last couple of years is this growing sense amongst policymakers that insurance is a is an important part of the solution and an important part of the answer to achieving those goals. So the most important tool that governments have to shaping insurance policy is regulation. And now, for those governments that have signed all those commitments in the Sustainable Development Goals, the most important thing is that insurance regulation enables the insurance industry to deliver those goals, to open up markets, and to reduce poverty. Because we are talking about the 5 billion, Yoshi, that you mentioned at the beginning, the protection gap billion. And I suppose it is in this space where we are talking, Yoshi, about the same governments that work with you, the same governments that have those mandates to create international standards and unify standards. They are exactly the same governments that have committed themselves to breaching the protection gap through the Sustainable Development Goals. And from our side, we are looking forward very much from the Cambridge side to continue your work in the IIS, your colleagues at the A2II, with especially on this new report that we are embarking on specifically mutual microinsurance, the tremendous lack of knowledge that there is about what it does at all levels, so from potential consumers, but all the way up to regulators and the governments themselves. So if we provide for the first time an assessment that is quantitative, it is about how the model works, how the mutual microinsurance model works. We provide data, and we create information to just filter into these networks of governments. It can be just a very powerful mixture moving forward, and especially with all the expertise that there is in this room today. Yoshi?
Just to, and just following what Anna mentioned, again, there is a huge opportunities here, and what we do as an IIS is, as Anna mentioned, not only developing application or sort of, guidance, which is proportionate to microinsurance issue, taking into account their business model, but also creation of A2I access to insurance initiative, where it's our partner, majority of board members of insurance regulators. So anyway, we work extremely closely. And A2II, what they do is to provide support and good practice of not only regulation, but business practice and so on. So platform for exchange of information, particularly emerging market and specifically microinsurance in detail. So that's a very strong body that we create. And what extremely positive news, what we see in the past or recent past, is more and more thanks to new technology. Somebody mentioned this morning, this distribution cost is enormously, lower than before. And there is a business model, sustainable, profitable business model in the commercial entity to provide very sensible product, insurance product. Of course, it's not all the areas of insurance, but some product is very much, business-oriented product, and a wide range of people have insurance coverage. So that's a very positive news, and hopefully this will continue and then improve in the future. And also regulatory approach, we have a lot of interaction between different regulators, and we see that development. But also PPP, public-private partnership, in some areas of insurance, as Stephen mentioned this morning, it's not businessly sustainable. So government partnership is extremely important. And those issues is, as Bill mentioned, it's complex area. But compared with, let's say, a few years ago, there's no IDF, there is no microinsurance initiative, and that's a huge improvement. So hopefully we keep momentum and improve further.
I'd like us to actually go back to and go to the technology and innovation in a moment, but I'd like to put this question to you. I flagged up because it's a very interesting one. It's a great panel to have it on. Question for Anna. I'd like to know, based on your research, what single regulation you would change that would benefit the most people around the world in terms of accessing necessary insurance products? Oh, this is a difficult one to come completely
Pressure on
out of.
my
Yeah,
side.
yeah, exactly. No pressure, no pressure.
With Yoshi here, so I would like also to pass on to the question to Yoshi after my intervention. But I suppose what I come across constantly is lack of regulation, especially on the mutual and cooperative microinsurance space. Lack of regulation is completely stopping initiatives and very promising initiatives from thriving, from reaching out to customers, from accessing reinsurance, simply from operating. So if there is one pressing message, I would very much like the report to be able to provide once all the data is analyzed, is the fundamental policy need for governments to give mandates to the regulators, clear mandates to open up the possibility of mutual microinsurance in countries and to reach out to the very poor billions of people that we are talking about.
Tim, I'd be interested in your view here.
We had a bit of a pre-chat to this panel. I don't think it's revealing any secrets here, but one of the comments I thought about was, we get asked this a lot, this question. You know, if you had a magic wand, what one thing would you do? I'm personally convinced there is no silver bullet. That's a bit what I was trying. There is no quick fix. And that's why I talked about education. If you go to emerging markets, and I was with I met several people from African countries in the last few days, what is their problem? They have no disposable income. They have never had really a perception of risk whereby they could deal with that risk in any other different way. Just to imagine a world where an insurance regulatory change would change their life is, I think, I'm afraid, too simplistic. I just don't think it's going to work. And I think that's why this dialogue we talked about is so important. It's a whole range of things that have somehow got to be combined to be effective. But I'm equally extremely encouraged with what's been going on.
Bill?
Well, I just offer one. I absolutely agree. The issues are complex. There's no one single silver bullet. But what Anna sort of was mentioning, but to pick up, I would take a stab at the one thing that needs to take place that would have the biggest impact are changes in licensing requirements. Licensing requirements of who can sell the product, the microinsurance product, and licensing requirements of who can be an intermediary for that sale. That's the fundamental of market access, and it still has to be responsible. It still has to be consumer protection and policyholder protection oriented. But when you're talking about microinsurance, it is at a different level in capital and surplus requirements and formation, mutual status. You know, hopefully every country would accept a mutual to write the largest industrial risks. They should. But at a minimum, cooperatives and mutuals who are so vital to that element of the economic scale. So it's licensing, I think, is where the biggest change could and should take place.
Joost, if I could come to you next, and then Yoshi, I think. But Joost, if we...
Grant, I have no silver bullet either. I just want to make a call to action building on your points, because on one hand, it's interesting that you are sort of asking for more regulation, where on the other hand, we have countries like myself who have too much regulation in our view. So the answer must be maybe closer than it seems. And I think this is your point also, Tim, that if we, and this is why it's so good, we have these conferences, maybe we should have them more often, there's cooperation across countries, across constituencies, across maybe even within industries, because the answer may be closer and we maybe are looking too far. So I'm not sure how to, and it's maybe also, we have a lot of questions for Yoshi here, but as an international institute across all these borders, there must be best practices as well, and maybe on the licensing thing, Bill, you were alluding to, is we have it already. So my call to action would just be, I mentioned dialogue, but also cooperation within Amicia, within ICMIF. It's great, but that may not even be enough. We need to, sometimes be more in touch with each other than we have been so far.
Yeah, thank you. Just in line with what Joost mentioned, I think what is important, and Anna, thank you very much to emphasize the regulations issue, but as you said, it's a balanced regulation. But what I'm very much amazed by IDF initiative is kind of, reinvent or appreciate the value of insurance. So IDF stress, very simple, just insurance is collecting a lot of people's money, pooling, and then pay out to unfortunate few. And that's very simple, but a hugely valuable invention of the world, right? And that applies to sovereign issue, microinsurance. But this, educational exercise should be done not only consumers, but also government. Government does not only mean regulators, but also ministry and so on. And thanks to IDF initiative, I see some change of government. Government means not ministry and so on's attitude, more positive. And this momentum have to be kept. That's extremely important. And we really think that thanks to you guys, that the regulators also understand more the importance mandate of insurance system itself. That's totally, I fully agree. But not only us, not only industry, but government or whole community understand what great invention we have as an insurance. Mutuals, cooperative is a principle of this insurance principle, and we have to advocate again and again to around the world.
I think this also is something that is actually embedded in the name of this session, because we talk about policy as well as regulation. There are the challenges that come up as to, in certain jurisdictions, whether the policy that's implemented for the regulator is essentially one of market promotion rather than market oversight. And coming back to some of the comments that have been made earlier on today and yesterday, that what essentially is at the core of what we're discussing is trust. And we all accept that we have to have the right level of regulation in order to have that trust relationship. And I would hope that particularly from the mutual and cooperative sector's point of view, that we can extend that trust into our policy and regulatory counterparts, because we know that we are closer to the person who's not here in the room, the consumer, the policyholder, than we would see in other sectors. And that knowledge can actually be brought, because everything is in the policyholder's best interest, that knowledge can be brought into those debates. So my takeaway from this is going to be that our dialogue will get faster, our dialogue will get more open because we have our trust relationship established, but one where we can speak freely, but at the same time respect that the differences will remain from time to time. But sorry, Bill, if I could.
I mean, this is such a huge issue. It is the issue, the trust issue. Regulation does help immensely, and that's why that dialogue has to take place. But the industry also has its own heavy burden here to carry. This industry is not understood by most people who buy our products, and people who invest in our companies, if it's a stock company. And it's not because we're nefarious. It's just people don't know what we do. They don't know how prices are set. When you get into cat modeling, it is the epitome of a black box. And people are asked, particularly a government, to spend a lot of money based on what pops out of this box. Because as a reinsurer, I'm telling you, this is the price of your risk. Well, when that price is millions of dollars, and you're wondering, what does it do? How did you get there? So I think the discussion has to, be with the regulators, because it's a core part of it. But again, it's only part of it that this industry needs to engage and talk more. I'm mindful of on the previous panel, the woman from the OECD. It resonated. This poor Cambodian government official who has a reinsurer chasing after them, saying, "I'm here to help." And you have no idea how that business operates. This is part of what the IDF is to do, though. And this is part of what the Global Center for Disaster Reduction here in London is. There is an understanding, the IDF constituency understands there has to be transparency. There has to be the resources for government, for sovereigns and sub-sovereigns to go to a trusted advisor, not just the well-meaning reinsurer, but a trusted advisor who can help them understand these are your options, these are the prices, this is how you go. So there's a lot that has to be put into place. These issues are not quite the same on the micro issue. There are other ones, but certainly at the macro risk level, that part is part of the trust component.
Tim, then Yoshi-Rutin.
I just want to give a quick qualification of that notion of trust, because it seems to me we could be aiming for insurance to be trusted, but I suspect the challenge is for us to be the most trusted to be able to deal with the risks. In other words, when you see the competing potential risk financing mechanisms coming in, and I'm sure some of you saw the very effective crowdfunding raising that was done post-loss in Texas, which is an unregulated field, of course, or post-loss government subsidies, which raises huge issues about how far does a citizen trust its centralized government to dispense that money fairly. I think insurance is going to have to pick up the challenge of being the most trusted to deal with it.
Yeah, just to a bit different angle, but to now trust, assuming that the cooperative mutual is an excellent business structure to enhance trust or create trust. And how do we make best use of high tech? And high tech is not high tech for the purpose, but high touch. How do we communicate more closely with customers? Constantly good service to customers, regular advice is huge, enhancement of trust. And now you have plenty of opportunities to do that. And if you not do that, others could do it, and they can get trust even more than you guys. So based on your fundamental big foundation, make best use of new technology and high-touch business, high trust for service would have a huge enhancement of your business in the future.
I'm just aware we're actually at or slightly over time, but I don't want us to not have any final questions if anybody wants to do the hand-raising bit.
Well, the beer is still out there, right?
Yeah. Hello, you awake? Yeah. No. So I think that we really do have to wind up. There have been some fantastic questions, and they're still coming through, which is, oh my goodness. And there are certain areas that we were hoping that we'd be able to discuss in a lot more depth that we just haven't been able to, because this is such a big issue. And this is, I suspect, one of the core issues that will continue: the policy, the regulation, the political environment. So I would just like to ask each of you, just for your final closing views, either to go down the line of, if there's one regulation you would like to change, what would it be? Or where you see the importance of what's going to happen to our regulatory and policy future. So maybe if I could start with you.
Thank you. So it's the client that will be the key figure in the future of our industry. They will determine the future of our industry. They're the ones that pay the bills, as we say in my country, because, well, they're the ones that are going to set the pace. They're going to tell us what they want, really. And it's impossible to put any entry barriers to what the final client wants from the insurance sector. So we have to offer them what they want, basically. So all people involved in this sector, reinsurers, insurers, regulators, etc., will have to overcome this dilemma, because the client is at both ends of the sector, beginning and end. it's not the standards that disturb or disrupt the sector. What will disrupt is if we don't focus on the client and the services that the client wants. You can have a series of standards, but you must not lose sight of the user, the client. The client is pivotal. And normally they're not present in this sort of discussion, in this sort of debate, at this sort of conference, etc. It would be quite good, actually, to have the opinion of our clients, what he would do with the policies that we're talking about here that we want to offer them.
It would be an interesting thing to see in the future, actually bring in somebody, a policyholder, and understand what it is that they understand about what we're about and what it is that they're being protected from and by whom. But just if I could come
thanks
to
for
you,
teeing it
Bill.
up because this machine died on me, so I
la,
couldn't
la.
quite hear all of that. So my comment will, I think, be more of an encouragement to come tomorrow and the day after as well, because we haven't really touched on the fintech side of things, but I think it's, as we are trying to improve our processes and understanding with the regulator and put into place everything we need to do, build on trust, if we're not careful or spend too much time on that, the fintechs will already have, surpassed us quickly and fast. I really fear the day that either Google or Facebook, who have huge trust with the customers, they have the data, they may be able to, get around regulation in a much smarter way than we do. That if we keep, staring at ourselves and talking about all these issues too much, we forget there's a world out there where millions, billions of people have actually access to these kind of providers with huge trust. They trust them everything, basically.
Yeah.
So it's another topic, basically, but a very important one that actually might shortcut all these issues is the fintech companies. They're already there. They're growing quickly, fastly, and what have you. And I think tomorrow, this is more on the program today. Yeah. So the encouragement is come tomorrow because it's important and it's here to stay. And if we don't watch ourselves, they're going to be the new winners on our market.
Great, thank you. Anna, we've heard about your desire for more regulation, but is there a final thought?
Well, from my very humble position in this very complex matter, I would just like to call all of you here. We have in this room a tremendous powerhouse of practitioners doing just remarkable pioneering, innovative work. You have the knowledge, and it's your time to speak. There are more platforms now than ever before. Yoshi has countless times throughout this panel opened up the IIS for further dialogue and communication. We have the Sustainable Development Goals, IDF-related platforms. We have independent university researches being done. Ultimately, just please speak out, communicate, tell all these to all these different platforms what do the practitioners need. On Monday, this Monday, ICMIF hosted the IDF microinsurance working group. We had the governments of the UK and Germany, and there was a very clear desire from them to understand what you want, what the practitioners want, what is the message to them that then they have to work on. Thank you.
Great. Tim?
So many points, hard to wrap up.
I know.
Look at the world around us, realize the importance that we need to change quickly, think about whether we as an industry and as regulators can anticipate the changes that are coming down the line and then work together to meet those.
Thank you. Bill?
Listen, I'll just end with maybe the obvious. The protection gap is massive. It's growing. But the resources of the insurance industry to address it are equally great. It really is a time for this industry that we all know and love to step up and help solve these problems, which are fundamental to the resiliency of economies, to countries, to businesses, and to people. And everybody here can play a part in that and should.
Thank you. And Yoshi, your final reflections today, please.
Since mutual and cooperative has huge access strong access to policyholders and local. That's the foundation of any business, even the world is very globalized. So you have a huge strength in this current world, and if you make well-equipped with new technology, further improvement, or take advantage of your access to policyholders or members, you will be much stronger, and your responsibility and potential is huge. So I really hope, and of course our regulators' approach is proportionate. As Anna emphasized, it's not over-regulation, but proper regulation so that your business will be prosperous with sound policyholder or financial soundness. So we are with you, and I really hope that this kind of platform will help you and help us regulators to create a better world, and you have a huge responsibility and opportunities. Thank you.
Thank you. Well, I have to say, from something that I thought I was looking forward with trepidation, this has been an absolute pleasure. Thank you so much, all of you. I think we're seeing that we have movements already through the discussion we have, which is excellent. Thank you for all of you in the audience for supplying your questions, for answering our big questions so honestly, even though you were anonymous, so that made it easier. There are other questions we've received, and as has been said, even though they are all anonymous, we will do our best to get answers to them. So I'd like to thank you for listening to our panel and for responding so well, and in particular to this fabulous panel. Thank you so much.